Hi guys, my name is Ariel and today I'm going to share with you the basics of bookkeeping for small business owners. Well, I know some of you might be wondering or might be asking, what is bookkeeping? Is it important? Well, actually, it is important, especially to the business owners because uh, bookkeeping is the process of tracking your income and expenses on a day-to-day basis. Bookkeeping helps the business owner budget. Second, it is necessary for tax preparation. And third, it helps the business owners in making their decision by first understanding your financial performance. So on the next video, I will explain the process of bookkeeping.
Business transaction is first recorded in a journal, which is also called a book of original entry. The journal keeps a record of all the business transactions, like this, tracking them in a chronological order, like this. It has a date as they happen. So everything will start with the invoices or what is happening. It should be listed on your or on the business journal. After the journal is the ledger, which is also known as the second book of entry, which contains the summarized information from the journal, like this: the cash, this one. So these are the summarized information from the journals and is recorded as debit and credit. This is used to prepare the financial statements and contains a list of all the accounts referred to as the chart of accounts. Yeah, this one, the cash, accounts receivable, and also the account number there. So after the bookkeeper categorized the transactions into corresponding accounts and recorded them in the ledger, next to check is if the books are balanced. So the trial balance helps with that. It shows the ending balances of all the accounts as they appear on the balance sheet. The trial balance contains a description or the account name, account number, the debit and the credit. So once the information from the ledger is consolidated into the trial balance, it is easy for the accountant to spot the imbalances between the debits and the credits. So it is concise, it needs to be concise, orderly, and it helps remove the discrepancy. So it is proved to be a handy tool in keeping the books balance. The journal, ledger, and trial balance is ready. The information can then be consolidated and turned into financial statements, like the income statement. Or this is sometimes referred to as a profit and loss statement, like this. The profit and the loss, or the expenses. So it reveals the financial performance of a company or a business by categorizing the sources of income and expenses. Here in income statement is the statement of the changes in owner's equity. This details the changes in the owner's equity that have occurred over a period of time. It shows the balance of the owner's equity at the beginning of the period, plus the contributions made after that date. And then minus any funds that the owner withdrew. So that's basically it. Next is a balance sheet. So balance sheet is a statement of a business financial position at a single point in time. This is usually done month end or year end. Um, it shows that the company's asset is equals to the liabilities plus the owner's equity. The cash flow statement. This is a report on cash that came in and cash that went out. It categorizes the sources or the source and amount of cash received, such as from the sales or cash flow from operating activities, investing activities, financing activities. So, there. Lastly is the post-closing trial balance. This is the final trial balance prepared before the new accounting period begins. So it is used to make sure that beginning balances are correct, and it is also used to ensure that debits and credits remain in balance after closing entries have been completed. So that's it. That's the process of bookkeeping.
So that's the basics of bookkeeping. I hope you learned something from this video. And if you have any comments or any questions, just feel free to ask me, write a comment on this video, and I will get back to you as soon as I can. So again, thank you for watching. I hope you have a great day. Bye.